City said the team.
All right, ladies and gentlemen, welcome back. We got the second. Oh, you start with barking already, huh? I can't even get the intro. All right, welcome back, guys. Our second chart talk of 2022 coming at you.
Let me take these puppies out of here. We'll start over.
Oh yeah, okay. Ladies and gentlemen, welcome back. We got our second episode of Chart Talk of 2022 coming right at you. We got a lot of volatility in the market. We got some big news out of the Fed today. But first, Bennett, give us a couple of Vermont stories. I know you guys were partying up this weekend in the warm, sunny, beautiful Vermont, my favorite place in the world. So please, we'd love to hear some stories.
Yeah, it was quite frigid. Actually had to buy
it. Was it 14?
It was very cold. It was really cold the first day, but the next on Sunday wasn't that bad. But I had to cave in and finally buy goggles after 10 years of snowboarding without them, which I know you were pretty excited to see that I caved and started wearing goggles again. But funny stories, I think there's two of them. One, I remember Justin, an Alpha Alerts member, tore his ACL recently and came to the trip but didn't want to snowboard and decides to instead go on a hike. And this hike turned out to be like an 8-mile hike that he wasn't aware of. But I wouldn't have even believed that he went on the hike, except for the fact that we actually met him randomly at the top of the mountain when he was done with the hike. And then when we had to actually take him back to his car, we had to go all the way into town. It was like a 15-minute car ride to go get his car where he parked. And it was just insane that he basically hiked up the mountain the longest way humanly possible, but didn't want to snowboard because of his knee. It made no sense. Honestly, I would not have believed it.
And when you're hiking, it's the most dangerous thing for your ACL because of all the weird footing.
Yeah, it was like, honestly, if we didn't drive him to the car, I would have never believed that he not even hiked the mountain, but like from where he actually started, it was just so far. Like we must have been doing 30 miles an hour for 15 minutes before we got to where his car was parked. And I'm like, how did you walk this? Like, or even want to do this? Like, why was this a thing? You're like, let me do this today. But that was one of the funny ones. And then, of course, on all the trips, and anytime you go snowboarding, it's always a race, even though it's not a race. And for some of the guys that can't keep up, unfortunately, especially at mountains like Killington or in Denver, if you make a wrong turn, you get lost today. You're kind of on your own. And Andy somehow lost us pretty quickly the first day, and we have on the Killington app, you can track where everybody is on the mountain. And when we get to the bottom, I go on the map to see where Andy is, and I see him going basically up the mountain, up the trail, which just doesn't make sense because it's going downhill. And we were just kind of joking, how is Andy going up the hill? We just thought it was a glitch.
Like the app must be messed up.
Yeah,
or something.
Yeah. There's no way he's actually going up the hill. And then later on the day when we met up with him, we were just joking about it. He's like, no, I hiked up the trail because I made a wrong turn, and we were just dying laughing that he actually was hiking up the hill instead of obviously going down it. But yeah, there was definitely some other funny stories, but I won't keep this video up for the remainder of them. But yeah, it was definitely a good time.
All right. Glad to hear you guys had a good time. Let's jump right into the market outlook. How about that?
Let's do it.
All right. So the big news came out of the market. I mean, we know we've been dealing with this hyper volatile market. The market topped one of the first trading days of the year, and we've been experiencing some downside action since. And we waited to do this one Wednesday because we had a big Fed meeting, so we wanted to see what the outcome of that was. And we heard, it was pretty expected that the Fed is going to begin raising rates in March. They're going to pull the plug on their asset purchases. So, that's never really good for equity markets in the very near term. So we did get that action. Well, we see rates climbing and things like that. So we're kind of in this bear market still. And I wanted to point out kind of the similarities we're seeing between now and the 2020 sell-off. I don't think we're going to crash. I'm not saying that. But, after Monday, we had a huge reversal Monday. And we started to get the market bid up again today. And then with the Fed, we sold off once again. So I wanted to highlight kind of the action we saw in this 2020 down move. And that's kind of the bear market activity that, we've been seeing lately where, we have that initial sell-off. Stocks get, oversold to the downside. And then we get these bear market bounces, which are vicious bounces where we test previous resistance levels and previous support levels, which is now turned to resistance, like here, Exhibit A, and then we continue that down move. And that's just what we've begun to see in this market. We look at today, that was kind of confirmation of my thesis that we are in this bear market. We had the huge turnaround day Monday. A lot of people were calling for a bottom. We get bid up, and we retest the 200-day simple moving average in the S&P, which is huge support, and we sell off from there. So from here, it's I expect to see whipsaw action. It gets very difficult on the day-to-day, and you got to really choose your spots very carefully. You got to be very in tune with market levels. I can't say that enough. The more in tune you are with the market levels, the better off you're going to be. And, you kind of take these things day by day. A lot of opportunity out there, but there's also a lot of risk and a lot of volatility. So, just kind of take it day by day. And until we see some sustained upside action, I think we're in this kind of sustained bear market until further notice. What are your thoughts over there?
So it's when you mentioned like the 2020 stuff, you're looking, I'm looking at it, and it does look very similar. The market was at highs. At that time, 320 was basically the out in the SPY. And we tested it twice, and then that third time we really broke down through it. And when you look at the market now, it looks very similar. We're at new all-time highs. We're seeing a clear level of support, and now 420. And that same thing, if the SPY continues to H over down through 420, we definitely could expect some similar follow through. Maybe not like you said, not expecting a 30% drop, but you could expect like that shakeout down, to 400, a little bit below that, and then you have that, that move back higher. So a couple of sectors, if we don't, again for the SPY, the clear line in the sand is 420. That's like the pivot low. Below that, we probably see lower prices. If we can hold that, we probably continue to trade in this range. Sector wise, if we do hold in this range, VHT or the healthcare sector is probably one of the ones I would gravitate towards first, just because it's not as beaten up compared to some of the other ones where we can buy up through, for VHT, it's like up through 242 versus 232. So it's a much tighter spot that you can get into some names if this is going to be the shorter term low. Sectors that I would try to avoid, unless you're already in them, would be sectors like energy that have already gone so much and will probably continue this trend, or if you're in them, it's great. But to try to initiate a position in some of these names now when they've gone on these extreme runs in a couple of days, it's kind of hard to put on risk in those kind of spots. Small caps we definitely want to avoid. They definitely broke this major topping pattern, and now this 204 that was support for the better part of the last year is now acting as resistance. So small caps are pretty much completely off the radar for the foreseeable future. Industrial is kind of the same thing. They're kind of breaking down into support, and it seems like they're kind of following suit with the similar pattern with the small caps, where they just based out for so long, and now they're not able to really support that area, and now more than likely we'll see lower prices in that sector. So those are kind of the main ones I want to go over, and you kind of covered everything with the Fed meeting.
I think you made a really great point in Alpha the other day. I kind of wanted to highlight it. We were talking about energy, and yes, it's the strongest sector. Yes, it looks like it goes higher, but the opportunity there, there's not how much more upside are you expecting? Yes, we always want to buy strong stocks, but you got to be realistic about market levels and the environment we're in. So just because it's the strongest chart doesn't mean you should gravitate towards that one as your first buy if you see the market pivot, for example.
Yeah, because even like for VDE, it's like if you're buying. When I'm comparing VDE versus healthcare.
When you say for VDE, you mean energy, right?
Yeah. So VDE is energy sector. So in this example, say you bought energy, which is kind of the strongest sector right now. You're buying it at 90. The pivots, versus 80. You're risking almost, 10%. Buying it at its relevant high. Where like VHT, for example, when you're buying it near its relative support and you're buying it up through 240 versus 230, you're only risking about 3%. So it's like you have 3 times less the risk buying this sector near support, where in energy you have so much more risk with it having to just continue higher immediately. That's just If you're in them,
if you're buying, what's up?
No, that's it. And
if you're buying energy here, you're betting on like $6 gas prices at the pump, and just like don't be an asshole, right?
100%. All right, so with that, Jake, do you want to jump into? I know a couple top of these are going to be pretty slim, but do you have anything you're looking at?
Tesla just dropped earnings. I think they have. They're kind of trading this aftermarket right now. Let me bring this. They're just testing a huge support level here at this 880 is kind of the aftermarket low. Mm-hmm. So I'm going to watch that area closely. I'm willing to go either way. If we see a move through that area, it's sustained, I'll take that one short. If we see a big reversal in that area, I'll take that one long. So that's much more of a reactionary trade, but definitely opportunity there. Tesla testing a huge pivot on earnings. I do still like this TSM long. It just needs a market pivot. Mm-hmm. It's none of these stocks are going to break out. when the market's selling the way it is. But this one, gapped to all-time highs on a big earnings beat. And then it's just been selling off with the market. It's just, a factor of the market weakness.
Mm-hmm.
So the second the market puts it in a real pivot, I expect this one to really take off to the long side.
Mm-hmm.
Other than that, just taking it day by day. I don't have a ton of things on my watch list. You got anything going on over there?
Really, the only thing is just this PAYC, and that's, again, this is, if it can turn up back up through like that 320, 340 area in time. But this is not something that I'm looking to get into. Like, it needs to really start to base out. But this is one where if it can start to base out, like the TSM, like it's based out so well that back up through that 127, 128 area, like looks so good. Where this PAYC is just still in this downtrend where if it can eventually start to base out and respect this like 300 area and start to trade between 300 and 340 and form that little base there to look to add up through it, that would be one that I'll keep on the radar. But it's very very slim right now. It's hard to really be gung ho putting risk on when market's jumping up.
Yeah, too early. You don't want to be too early right now.
Yeah. All right, so with that, any good and bad trades you want to go over?
I just did really well in this NASDAQ short in the Fed meeting. So I came in and, it pays to do your homework. We were expecting the rate hikes. We were expecting them to announce the rate hikes. The question was how many and how aggressively they were going to raise rates. So on the decision of the Fed meeting, the first move was higher, right? So I'll bring up here's the QQQ chart, and this is when the Fed meeting came, this first bar right here at 2 o'clock. And I noticed at the same time, the TNX, the 10-year, was also rising really quickly. They announced they're going to raise rates in a few months. It makes sense that rates are rising, right? Mm-hmm. Very, very simple math there. So my thesis on the trade was the NASDAQ, which has been super sensitive to any raise in rates, because of the growth stocks and the forward-looking earnings and things like that, and the risk appetite. So the second I saw the 10-year rising is when I began to leg into the QQQ short when we made that first top. So I got into some here, and then we were waiting for Powell to speak 30 minutes after the decision. So these are 5-minute bars. So this is him speaking here. So I initially shorted that 354 area against these 357 highs. When it came right back in my face, I just covered half at my price because I was waiting for Powell. And then Powell came, we got some more weakness. I immediately went to full size, given it to these highs. And then I covered into weakness and I covered it all into this down move. I think we'll get a lot of choppiness. But I think noticing the 10-year on the rise, along with that, you never believe that first move in the Fed is what they always say. I think that set us up for a real profitable trade. Again, pays to your homework. So that one worked out really well for us. It's always really gratifying when you have a hypothesis and it works out perfectly and you execute it really well. Now again, I don't think I could have executed this much better. I shorted into that little bit of strength against these highs, covered into weakness, covered more into weakness, and then got completely out into kind of this low of day area. And now we could bounce, we can go lower, but I got my trade off. I did really well with it. And in this market, as I keep saying, know your levels and pick your spots. We stopped right at yesterday, right around the area of yesterday's lows where we bounced. Mm-hmm. So that's where I was covering. That's where I was covering the bulk of my position, because that's a huge support level. We got there very quickly. Pays to know your levels. What do you got going on over there?
So I got a couple. These were pretty much all swings from last week that all failed. These were all basically trades I was looking to buy up off of support. So first one, we got this Ulta. We can see this was the support area. I'll put this in red. And then we had the, looking to buy up through those areas. So this was, all these trades, same thing, was, buying up. They turned, didn't work, took the 2% loss in ULTA. Same thing with this PWR. We can see that this, red line, this was the support area in PWR, looked to buy up through like the prior day's high. And it just got smoked immediately that day. Same thing, bought 106, got out 104, little paper cut. MMC was a different of these, which this was a longer term swing that we were in for probably 6 or 8 months. We bought it through this 120 and just continued to grind higher. And now that we saw that support area break into this 160, this first test, that's where we moved the stop up. It retested it again, and then now it seemed time to finally exit this position. And when you look at it, where you zoom out on the daily and you see the move that this thing has had, it was a pretty easy swing, kind of bought through 120, and it really was just the patience of holding it, to capture that, that 40 or so points when we were risking, maybe 4 points in the beginning. So that was a good swing. And then lastly, this zebra also failed. Again, same thing. Names were coming into support, looking for these little tight entries to buy up, verse them, kind of shots, but not going to work every time, but when they do work, you get some good stock. Didn't work. So we had those 3 trades that failed, 2-3% losses on those, and then the MMC that worked for, about 30% that we were in for a few months. So those were
very nice.
My last couple of trades.
Very nice, very nice. We right up to the book of the week?
Yeah.
Book of the week, I was reading, the hedge fund market wizards. They recently came out with one, unknown market wizards, and it's these like kind of random guys.
Mm-hmm.
Very cool chapter. So I like the equity trader chapter is the best, obviously, because I'm an equity trader, so I relate to them the most. There's this one dude who, what he does is he's super, super, super early onto market trends, and he was talking about 3D printers. Remember, that's when I started my prop trading career when 3D printers gave us that huge run, 2013, 2014. He went out and before it was even becoming a thing, he went out and bought a 3D printer. He spent $10,000 on all the equipment, started printing all this stuff, saw how cool it was, had all these cool things walking around his house and doing whatever and printing. So he was super early to it. He caught the whole move. He made like millions on the move. It was just really cool to see a guy who does his research very early, gets ahead of the market, times it, loads up a huge position, and then he rides it out. And then once it starts becoming popular on the news, once CNBC is talking about 3D printers and stuff, that's when he sells. So he's the ultimate buy the rumor, sell the news trader. I forget the guy's name, but there are a bunch of chapters on it. But that was just super interesting to me. I love guys that really get ahead of market trends and really kill moves, and he really killed that move at least.
Yeah, I remember, like I said, like when we started the 3D printing, like there was that phase. There was before that was like clean energy was like a big phase, and like with
solars,
well, like
Buffett invested in solars.
Like with Triple D, it's like it had that 1,000% run, and like, but I feel like what we're starting to see is like that bubble for 3D printing stocks took a few years for it to develop, break out, and then pop. Where now we're starting to see like with kind of the meme stocks and stuff that like these bubbles are like happening much faster and much quicker, and if you can catch them, which is easier said than done, you could make a ton of money. But definitely different trading style. The book I have is the $12 million stuffed shark, which goes into kind of the art world, the ultra high net worth individuals, and the stuff that they do, and I guess in a sense that the big thing on them is just a scarcity. And again, I'm not really any bit of a history buff or art buff, but definitely kind of gives you a little bit of a crash course on how like that whole industry works. And one of the things really they mentioned, like these crazy prices for artwork that gets sold, a lot of it is just because you have all these rich guys in a room, and it becomes kind of like a pissing contest of who can get that artwork. And knowing that with a lot of these very important pieces, once they're sold, if it's not bought by an individual and a museum buys it, it's basically never going to be for sale again. They're going to pretty much just keep it. So that's where if the person really wants it, they're going to have to pay these obscene prices. And it's just crazy when you hear these numbers getting thrown around, 80 million, 100 million, and just pretty crazy.
Right. And then it becomes the exclusive buyers club, and once you get in, you become like kind of a big shot. The more money you spend, then you make the networks. You can get more expensive art. Yeah, it's a very funny game, that art game.
There was one little they talk about like Christie's and Sotheby's, like the two main auction houses, and there's like two rooms. There's like the VIP room, and then there's the VOP room. And the VOP room is the very ordinary people room, and it's basically just like the people that like can't afford.
I'm a VOP.
Yeah, and they said that like they might have 500 people at these auctions, and there's only 15 or 20 that are actual like real bidders, and the rest are just kind of like showing face to pretend like they're there, like they want to just be kind of seen. It was just like a lot of people are faking it, and there's a few that like actually make the moves, and those people that do make them are often not even there. They're like they send like an assistant to make the bids. So they don't want their position to be shown that like they're bidding on the artwork. They want it to be almost as anonymous as possible. So I mean, you definitely see like the trading side of it as well, because some of these guys, when they buy it, they hold it for a couple of years, and they make these crazy returns. So it's just wild. But
yeah, that game is a different ball game.
Yeah,
different world.
Yeah. So that's all I got.
That's all you got. All right, that's folks. Second Shark Talk 2022 wrapped up. We'll see you next Monday. Have a good one.